I got the cash in the bag, stadium packed. Born a rock star in this life, gon' live it up on the attack. Baby, I'm bad, I just wanna get caught up in this life. I'm crazy, I'm mad, doing no cap. Only God wants you, better go live it up. Cash in the bag, stadium packed. Baby, I'm bad,
Yeah.
baby, I'm bad.
I just wanna stay bad, stay mad. Chip on my shoulder cause they treat me like an outcast. I ain't gonna take that, stay back. I'll be swinging hard till the hits come in all caps. I ain't gonna lay back, pray that someone's gonna help me. Ain't nobody like that. I ain't gonna wait, that's all fact. Give me one shot and I'll never get the throne back. I'm sick of being cautious, I'ma go cause some pain, can't stop this. I'ma steal everybody's lane, call it shoplift. Sick of hearing everyone complain when they thoughtless. Taste the pain, it's like candy canes. It makes me go change into a better frame, into a better name. Society's insane, we all live for fame, yeah. Cash in the bag, stadium packed. Born a rock star in this life, gon' live it up on the attack. Baby, I'm bad, I just wanna get caught up in this life. I'm crazy, I'm mad, do it no cap. Only God wants you, better go live it up. Cash in the bag, stadium packed. Baby, I'm bad, baby, I'm bad. I got the cash in the bag, stadium packed. Born a rock star in this life, gon' live it up. Baby, I'm bad, I just wanna get caught up in this life. I'm crazy, I'm mad, do it no cap. Only God wants you, better go live it up. Cash in the bag, stadium packed. Baby, I'm bad, baby, I'm bad. I got the cash in the bag, stadium packed. Born a rock star in this life, gon' live it up on the attack. Baby, I'm bad, I just wanna get caught up in this life. I'm crazy, I'm mad, do it no cap. Only God wants you, better go live it up. Cash in the bag, stadium packed. Baby, I'm bad, baby, I'm bad.
Only God wants you, better
What is going on, fam? Welcome back to another episode. My name is TradeFly, bringing you some of the most important market news as well as technical analysis that you can actually use. Hey, Bitcoin is a moving and we had a good call. So, I did have a bad call this week, but you know what? Followed it up with a banger a couple days ago. So I did take positions. I took multiple positions yesterday. We'll talk about that. We'll show some of that, but I made probably about $1,300 or so yesterday. Cash money in the pocket. Definitely playing that 79 to 80K range that we talked about. And that feels good. That being said, we got some more key levels to look at. We got a rejections from there. So are we going to go down and revisit some previous levels? We're going to discuss that. We're going to look at the levels and we are going to find ways to trade it because that is the name of the game here. That being said, let's say what's up to the homies in the chat. We got B Team Crypto in the house. How you doing, brother? Crypto Squid, what up to you, dude? T, how you doing? TMB Willa. Out of gang. What up to you, dude? Thank you for being here. Let's go ahead and get this party started. First thing we got to talk about is going to be the crypto bubbles. Nothing too crazy here. Stable is not stable. It is actually pumping 11.2% over the last 24 hours. Siren is up 3.9%. And let's see, Arrow up 3.7%. Let's see, who's getting beat up today? We got VVV down 7.6%. Pump is down 6%. XTZ down 6.1%. This is your top 100. And yeah, nothing too crazy. A lot of red out there, though. A lot of red out there today. Bitcoin did pull back off yesterday, so it's not surprising. The thing that you want to look for here is, hey, Bitcoin pulled back. Is this like exponential in comparison? That's when you get a little bit more nervous. But Bitcoin's got to push up. Once Big Boy pushes up, North Star, it consolidates, it ranges. That's when it's really going to open up that whack-a-mole for the stable, or not the stable coins, but the altcoins. Let's go over to the total market cap. Total market cap sitting at 2.6 trillion. That is down 1.38%. Fear and greed index is at 59. Neutral. Bitcoin, again, 77,700. That is down 1.4% over the last 24 hours. Ethereum is at 2305, 3.61% to the negative. XRP 143, BNB 634, Solana 85, Tron at 32, Doge at 96, and Hyperliquid rounding out the top 10 at 41.22. Bitcoin dominance is pushing up though. All right, so understand that Bitcoin dominance does have to push up. When it's making that move, you're going to see Bitcoin dominance going to push up, and then once it stabilizes, it starts getting into that range and consolidating, you will see Bitcoin dominance start to eke out, and that is when, my friends, you should see the altcoins play that old altcoin whack-a-mole that we talk about here on the channel. Be looking for that. All right, let's go ahead and get into our next segment here. That is going to be the Daily Degen. All right, rolling into it pretty quick today. If you guys don't know, the Daily Degen, the way this works is I give you guys, the audience, opportunity to vote whether we go long or short. Let's see what you guys got going right now. You guys are 80% moon. We got 5 votes in. Bitcoin is pulling back here a little bit to an all-important little level that we have found here before. We've talked about it here on the show. We can get rid of this. That has already played out, but look where it came back down to retest. Remember, we talked about that level. It was a rejection. All right, reject it right from the level we were talking about. And then what to do? It comes back down and retests the same horizontal level. How did I do that? What kind of black magic, TradeFly, are you working with? It's very simple. I'm just looking at horizontal levels. That's it. It's that simple. That fell. It just happened to fall within the 618 to the 0.786 golden pocket as well as the platinum pocket. And then I was like, okay, where are horizontal? Where is the price action reacting to those levels? Like, where do you see it bouncing? Where do you see an impulse move through the zone? Where do you see it retest an area? Okay, so that's kind of, and then of course you just kind of take your little average of what you're seeing there. But here or there, it has been respecting that level at about 76,300. And let's see here. You guys want to go? I'm not supposed to be doing any TA on this. I'm not supposed to. That's against the law here on the Daily Degen. Let's see. You guys want to go moon? All right. That is what you guys got. You are 80% moon. We shall do it. Let's use the old trial funds here. Thank you, 2-Bit. I appreciate you. Let's go 9, and then we'll 20x this puppy. There we go. Not normally how I trade, just so you know. All right, only got to move in the next 45 minutes, so we'll see how it plays out for you guys. That is in there. 20x, we got it. And long it is, because that's what you guys want. I think I did just take a trade here on... Was this... I don't know. I can't remember if this was you guys or me. We did just have a $67 winner there. I can't remember. I honestly can't remember. I think that might have been me. I don't even remember. It all blurs together. The winners that I had though yesterday were on BitUnix. Let's just go to the Discord. That'll probably be easier. I usually post the Flexor Rec there over in the Discord, so you guys can see it. Yes, I post the losers also. See, like I'm very transparent. When I lose, I post it. When I win, $974, I'm gonna post that shit too. Don't you worry. Don't you worry. All right. Yep. That was yesterday. Of course, once we had that push up, I saw the rejection. CVD OI started to align. Boom. I'm in there. All right. I went in hard in the paint. That is. So you're probably looking at it. You're like, that is not a big move. It's only like $100 some. Yes, that's because that was a $500,000 position. Yeah. Crazy. I know. All right. Should have held on to it though. Holy moly. If I would have held on to it like I had my normal trade, 55%. Woo-wee. Woo. That would have been crazy, but that's all right, man. I was lower capital on the real trade. That was a scalp trade. This is an actual intraday type trade. So that won $268, 55%. 55%. Man, that was a good one. That was a good one. I got into that one pretty early, you can see. And let's talk about how and why. How did I get into that? Dude, we were talking about it. I mean, we said liquidity was up here. I've moved that. Okay, I understand that that's updated, but it was at like 79.2, 79.3. And then we had this area right here. I've been talking about this for probably better part of a couple weeks. This right here. You had this move down, all right? So impulse moved down. You found a range, but look at how many times like it found resistance right at that level. Right at that level, 79.2, 68, 79.3, somewhere in that area, okay? So knowing that, and then when you look at the liquidation heat map, the heat map was telling you, hey, there's liquidity right there. So we marked it on our charts. So we had liquidity where? Right above. And that's what I talked about. So what happens? Let's look at this a little bit, closer. So what happens is when you see these rejections over and over again, stop losses and liquidation levels are right above that price action. Okay, so they're building up and that got left behind. Okay, so people stayed in this trade thinking they're going to short it down, all the way to Q3 this year. Well, the man had other plans, all right? They came back up. They took that liquidity that was sitting there right above that price action, all right? And then you saw a rejection. That's pretty common because the other thing that happened, all right, this is something that you guys need to be kind of, on with, is you need to know, don't pay attention to that one right there because that is something different. We're gonna go 15-minute here. All right, there we go. So I posted about this on X too. This is an important piece of the pie. All right, I'm giving you the sauce. Why do we have a barbecue looking freaking emoji in here? Because I give you the sauce. Let me see some of that. So one of the things that I was looking at was that you have this laddered, these passive orders that are like laddered essentially. All right, so 1, 2, 3. That's not typically retail. That's not how retail typically enters into the market. Like, let's be real in the chat. How many of you actually ladder into positions this way? I only know a couple of you. I know JR is one that likes to do that, but typically bigger money, okay, bigger pockets. This is the way they like to get into positions. They ladder in. Okay, so you have these passive orders that are sitting there. We knew we had liquidity sitting there. The odds were that we were going to see an initial rejection. Okay, understand that and understand that very clearly. When I say initial rejection, that does not mean we're done. That does not mean that we have to go down now. That is not what that means. Like, and you got to understand that part of it. Okay, so when I say that, Now let's go back to the chart. Because right now, this is the trend. Very clearly up. Okay? I'm gonna try not to say right because damn it goes right every time. We're gonna say very clearly up. We're riding this channel right now. You got the 50. All right, this is kind of a hybrid. I think it's like might be like more like a 55. This is something I'm working on, by the way. It's not ready for y'all. My cotton candy damn colors I got going on right now. It is not ready for you yet. But friends, I'm gonna try to bring you something special here. All right. I am going to try to bring you something special in terms of indicators, but this is the 50. You can see kind of the crossover, all that good stuff. It's been riding that up, just bouncing. Sorry, I keep saying 50. I mean 55. Around-ish. Okay, there's some other things that are kind of factored in, but it's pretty close to the 55. So anyways, following that up, and then of course you can see this trend line here acting as resistance. Very clear channel, right? Just bouncing back and forth in that channel. But that's what I'm talking about, right? Like, so one, I'm not going to fight that thing. Right? If I'm taking a short position, I'm not going to fight this trend line right here. I'm not doing it. No way, no how. But how do we know, that we have the opportunity for an entry? Well, guess what? If you're looking at this trend line, if you just extrapolate, kind of get as many touch points as you can, right? That's kind of what I like to do. If I can get more touch points in there, the better. Okay, so there we go. So now you're hitting kind of the bulk of them, hitting all these, hitting these, hitting that one. Yeah, you catch the drift. So you knew that around that area, because it's not going to be perfect. It ain't going to kiss the trend line every time. If you're asking for perfection, good luck. But when you're getting close and the liquidity's off the table, that's a biggie. Because if the liquidity's gone, you're going to see where it's dark just above. And I posted that on X as well. It was cryptic, okay? You got to be in the Discord if you want the good stuff, or you got to watch me on YouTube. I ain't giving away all the sauce on X, right? Oh, there ain't nothing in it for me. So I'll give you a cryptic tweet on X. You can follow me, and you might be like, ooh, let me get over to the Discord, or let me come on over to the show. But that's what I was getting at. Like, that was the time, and that's where I entered. And, I put my money where my mouth is. So let's go back on over to the chat here. Curb Stars in the house. What up to you? Made a few trash trades today. Kind of revenge trade. It feels stupid for doing so. You should have stopped. Dude, it happens, right? It does happen. That's part of the psychology. It's part of learning. But you've noted it. And learn from what you're noting, okay? So, like, that's something that I had to learn from. I kept fighting the trend. I had a bad... I won't say a bad... man, I found myself a lot of times inverse trading. Everybody would get bullish. Everybody's like, it's going to the moon. Bull market's back. And I'm like, that sounds like a short to me, bro. That's what that sounds like. So I have a penchant to trade against retail because I try to think, like someone with bigger pockets, right? I try to take more of like that inverse psychology, like the institutional thought process, right? When you guys are, I'm not going to say you guys, but when retail is getting fudded out and, everybody's screaming that we're going down to 30 and 40,000, then I'm starting to think that, okay, this might be a time that institutional money may start buying. And we can actually validate that. That's on the chain as well. It's on chain, right? Institutional investment has pumped up. I talked about that on the last show. In record numbers. ETF inflows have been through the roof as well. So, it's not surprising to see this move. And the thing that I noticed is that it has been extremely resilient. If you've been watching the show, I keep talking about it. Like, we got macroeconomics is crazy right now, right? Or, the economic the situation that's going on. I keep want to tie it to economics, but the situation that's going on in the world right now, like, that's crazy. That's crazy. And how resilient it's been has been unreal, honestly. Like, it's held up quite well with probably one of the bigger stories that we've had in the past couple of years. Like, I would say it's big enough. Now, I know traditionally that the markets do recover quite well whenever there is war, right? Like, it's just a fact. If you go back, you look at the statistics, the prices usually recover quite well. And it's just the way it's been, for a really long time. But dude, I mean, like we're still in the midst of it. We're still getting the straits closed one day, it's open the next. But, I wonder if this is a game they're playing because, there are reports that people are taking out these massive positions hours before that news is released. Right? Understand that this stuff is mostly trackable. So if somebody's in the know, I mean, we know people are in the know because, they know before it's going to get announced. But here nor there, man, if I could only be in the room, that would be sick. All right, let's talk some analysis of what we got going on. We've talked about the trend. This channel's pretty clear. What I'm looking at right now is really more down here. Okay, and I want to be clear, and I want to preface this by saying I'm not saying that it's going to go here. You're going to hear me say that over and over again. This is not a call, so I'm not saying take a short because it's going to go here and then it's going to bounce, right? That's what TradeFly is saying. No, it's not what I'm saying. What I'm saying is take a step back, pump the brake scooter, and if price does come down here, then we start taking a look-see. Now, what we got going on right now is obviously this moving average. All right, this moving average is working up and you have the golden pocket. I do expect some price action there. But ultimately, that's not what excites me the most. Yes, I would say there's probably going to be a B+ setup sitting in that area. Probably. But I would say the more logical place to find a reaction is actually a little further down. A little further down. Why? A couple of reasons. You got the platinum pocket, 0.786. Lovely place to find bounces, I promise you. You got the weekly pivot. That will shift on Sunday. You have liquidity, okay? Liquidity is down around 73.5, 74 in that area. So I would love to see a wick come down here. Grab that liquidity. And there's an order block. Overlaid with pivots. Overlaid with the platinum pocket. I'm not going to say it's almost too easy, but you have a lot of confluence, right? There's so many different reasons that you could see a bounce. It's kind of crazy. Now, where are the passive orders, you ask? Glad you asked. Great question. Let's go look for that. On the 15-minute, surprise, surprise. The passive orders are sitting at 75,000. Now, it doesn't have to necessarily wick right off the passive orders. You will see plenty of times where it pushes through passive orders. See? Case in point, right here. Pushes right through. However, ultimately, enough people enter the party to turn that B around. Okay? So that's what we're going to look for down here. If price action comes down to about 75K, I'm going to have an alert set. I'm going to be ready for it because I think there's a high probability that you're going to get some price action out of that area. Now, what would you look for? That's the other piece of this, right? Giving you the sauce. Giving it all to you, okay? What would you look for? Well, when price action comes down there, if it comes down there, you're going to be looking for a couple things. If you get a big wick, you get that big wick energy out of that area, okay, then that would probably make you feel a lot better, right? Buying pressure's coming in. What can you do? You come over to whatever order flow you want. I got links for everything. You want Kayataka, come to Kayataka. You want Market Monkey Terminal, go to Market Monkey Terminal. Both of them are great. Most of it is free, which is really, really nice. But that being said, come over here and start looking at your CVD and your open interest. That will cue you in. Let me give you a demonstration. Share today's show. Share today's show. Please share that out if you have the opportunity. Why? Because I'm giving you something valuable right now. I am. You're going to look for something that looks like this, but inverse. Okay? What do I mean by that? See how price rejected, kind of stalled out in this area? What, this is the fun part. This is the real fun part. What would somebody say right now? If I can't tell you how many people, let's take that out. All right, just looking at this. What is that? I love this. I love this. What is that, fam? If you looked at that real quickly, what is that? Here to here. Tell me what it is. This is lovely. I love this because so many people try to trade this thing, right? It's a very common pattern that people try to trade. I know a guy who makes a living off of it. Not by trading it, but by talking about it. All right, so bull flag, right? That's what everyone likes to say. They like to say that that's a bull flag, yada, yada, yada. All right. They say that's bullish. Check the stats. It ain't. But see how it stalls out? This is how we get our advantage. This is our edge. We start looking at it. Remember when I said A plus, right? So you'll see a lot of times you'll see open interest kind of dip, which will tell you that people are unloading, but you got to understand where the trend is going. But in the A plus setup, you start to see that CVD trend down while open interest is going up. What does that mean? Positions are coming into the market and they are aggressive. The shorts are aggressive. So positions are coming into the market and the shorts are aggressive while you're kind of stagnating, and you see passive orders stacking over top of the price action. Weird, because just at that moment, just afterwards, right? Somebody knew something. Just after that, there's an announcement. News comes out, bearish news, dump. I will say, yes, news was the catalyst to that. But because people knew prior to that what happened, open interest was going up while shorts were aggressive. Easy day. So you're looking for this, but the inverse of it is that you're going to be looking for CVD to go up. That's it. Really, that's your difference. So you'll look for something very, very similar to this as you go down to those levels, or the level I was just talking about, right around the 0.786. Wick, right? Get that liquidity. Take that liquidity off the table. Come back down. Okay, cool. We're all Gucci. And then you see that open interest going up, and you see that CVD going up. All right. And then next thing you know, guess what's likely to go up? The price action. You'll probably get some sort of ascending level of support with a horizontal level of resistance, and then pop. That's what you're looking for. I've broken it down for you. You have no need to watch any other show today, because that's the sauce. Tell me who else is doing it. Well, you know what they're doing? They're not giving you the sauce. They're opening a trade, and then they're playing it on YouTube and saying, look at my profits. Well, guess what? Half of them are opening a trade two ways, and that's the way they roll. There's not a lot of dudes that are doing it live. There are a few. I give credit where credit is due. There are a few that do. I'm not trashing everyone, but most of them are not telling you how to execute. They're not telling you. They're not telling you exactly what you're looking for. They're not giving you the sauce. All right, enough of that. Let's look at USDT dominance, see what that's looking like. Still pushing down here aggressively, but you are getting to, it is following this moving average. It really is inverse right now of Bitcoin. So this moving average is acting as resistance. Understand the inverse relationship. So if you interact with that again, if it pushes up, Bitcoin pushes down, but this looks like it's acting as resistance. So if it's acting as resistance, the expectation would be for this to move down, which would actually push Bitcoin up. If you break, right, that's going to be nosy-gozies for Bitcoin, right? So if you see a break of this moving average here, then I would say be careful, because right now it is honoring it. So that would be a change. And then, of course, you do have support down here, all right? So down here at about 7.194, 7.18, there is support very clearly for USDT dominance. So just understanding the inverse relationship. Are you in a trade? Are you not in a trade? You know, if you're not in a trade and it comes down to this level, and then you find yourself at a key level for Bitcoin, then you start thinking about, okay, we could have a reaction here based on the confluence between the charts. Again, sauce. This is been pretty fire, to be honest with you. Look at the reaction with the value area high and the POC. Closely aligned, acted as resistance multiple times. You can, what's cool about this is you can kind of draw a line in the sand. All right, so just like Bitcoin, where I was like, hey, 72 to 74K, line in the sand for me. Kind of same kind of deal here. Is that you draw a line in the sand, and you're like, all right, cool, this is my level. Obviously, it's been respected over and over again. This is where you start thinking about flip-flopping your bias. This is where you start thinking about closing some of your trades. Or if you get that pop through and move through, then the expectation is, you're starting to get a move in the opposite direction for Bitcoin, right? So if this pushes up, Bitcoin pushes down, yada, yada, yada. But that being said, if we were to push through this moving average here, then you're looking at the previous value area low, right? You see the action. All right, I'm not going to call it price action so much, but you can see the reaction. Plus you have some technical levels as well. So keep an eye on that. But again, confluence between the charts, something that you should pay attention to. Let's look at total market cap real quick, because that's always got to fight or say. This is almost just like Bitcoin. Ain't much to really talk about there. It's almost exactly the same. See it bouncing around there? Because Bitcoin's daddy, really, when it comes down to it. So you could see that there was going to be some kind of resistance as it got close. There's not much to really talk about. Looks about the same. See what you guys got in the chat. We got Ash in here. What up? What up? How you doing? Stock group I was in years ago is always laddered 4 entries and took profit 4% every time. Slow and hard style to adopt. Yeah, man. I'll ladder into positions, no doubt. I will sometimes, but I see that as more advanced, personally. And when I say that in terms of your average retail crypto trader. Most of you do not ladder into positions. Some people were adamantly against it because you're saying you're building a loser. I would say there's times, right? There's different times for me. So strategically, when I start laddering into positions, these are positions that I tend to hold longer, or I plan to hold longer, understanding that there could be drawdown. But if we were to bounce at a key level and go up, like right now, you guys know, I've been very vocal about it, and I've said it, publicly, that I bought Bitcoin at 72,000, not at 125,000. I bought Bitcoin at 72,000. Why? It was a key level for me. The price action showed me that it was a key level. So I purchased Bitcoin at 72K. Now I have more levels to go down, and I'm not going to be hurt if we go under 72K. It's not going to hurt my feelings whatsoever. However, I am in profit right now. But those that have waited for that full drawdown to 60K or maybe lower, I think maybe it was like 45 or 50K, some people are saying, if you're waiting for that full drawdown, you may not get it. This is different times, right? It's generally accepted now in the United States. They're trying to pass legislation in regards to cryptocurrencies. There's big money in cryptocurrencies. It is a different conversation than it was in 2021. This is not the same. It is not the same. So yes, I bought at 72K, but my objective is to ladder into my position and to reduce my call spaces. But that is something that I plan to hold. All right, hold through the 4-year cycle, right? I am going to respect and honor the 4-year cycle until the 4-year cycle is no longer a thing, because let's be honest, we did get a rejection. I think it was in October of 2025. Was it October? I think it was October, which fell right in line with the 4-year cycle. So, I'm going to play that game until that game can't be played anymore. Yeah, October. That's what I'm going to do. Right? And so I had this level identified where we're talking about, let's go to actual Bitcoin, even though it follows the same. This area right here, the top of this range. We have a penchant to come down and to retest the top of these ranges over and over and over again. So the expectation was that we would at least come down and retest that level. If we get the full drawdown, I think that takes us down maybe, and it might even be as low as the 30s or something like that. But I got 3 positions. I've already put it on X if you guys want to find it. It's in the Discord and it's in X. I got 3 levels that I'm looking at Ultimately, the plan is to reduce my call spaces to somewhere around like 50,000. And that's how I approach it. I don't typically ladder into positions that I'm trading intraday or scalping, obviously not. But I would just say the vast majority of people they identify a level that they like and they're comfortable with, especially if they're trading, and then they work around that. They find support, they find resistance. The thing that I do that's a little bit different is that I don't just find support and resistance, I find liquidity, and then we talk about the support and resistance. That's kind of the difference between me and a lot of other people. Why? Well, because you don't want to be part of the liquidity, right? Because the liquidity is being hunted. They want that liquidity off of the table. And so if they want that liquidity off of the table, like if you were to be like, I am going to buy at 79 or short, I'm going to short at 79,353, whatever, like you could be good there because the liquidity was a little bit like right there. Okay, so it'd be a matter at that point is like, where's your stop loss at? What you find though a lot of times is that your liquidity will extend. Okay, so here's a good example. You have liquidity here. There's no doubt about it that you have liquidity here, right? That's your swing low. And then as it's working up, there's definitely a big swath, we'll call it, of liquidity. Now, as a retail trader, most people will be like, okay, cool, I know where the swing low is. I'm trading that swing low. Now, where are you likely to put your stop loss? Let's zoom in just a little bit. You can see these faint lines. Hopefully you can see them. You may not be able to. I got really faint, like greenish lines here. But knowing that there's liquidity here, we'll draw this just so you guys can see it a little bit better. There you go. And then I'm going to put it there midway so you can see the distinction. Where's retail likely to put their entry? Right here. Most of them will put their entry right there. And a lot of them are crazy degens, and they'll go super high leverage, which means their liquidation levels are probably right around here. What they've done is they've added to the liquidity, and they've increased the incentive for the price action to continue down. Because there's liquidity here. How do exchanges make money? Yes, they make money off fees, but they really make money when they liquidate your ass. All right, when they stop you out, when they liquidate you, that's a moneymaker. Okay, understanding that. So if you're adding yourself into the liquidity, you're being the liquidity, right? That's what I always say. Know where the liquidity is, or you are the liquidity. Well, you've added to it because you've put your stop loss down here, or your liquidation level down here. But also, if you were to come back left on the chart, you would have known. You would have known that there's another box of liquidity already sitting there. So what you've done is you've entered, and then you've put your stop loss or liquidation level right into where this next area of liquidity is. And that's what you got to be really, really careful of. That's why I kind of wait. All right, I wait till this liquidity is off or out of the table. Now, that's why I didn't have as much of an issue getting in yesterday, because I knew where the liquidity was. It wasn't higher, right? How did I know it's not higher? Well, because look at this move, all right? There wasn't enough volume. There wasn't enough time for people to put stop losses progressively down or liquidation levels down. They would be up here, or really more so up here. That's probably where your next bit of liquidity is sitting. So you have some at 80,000 right now because of yesterday. You had a little bit around there, but now because of yesterday, you have people piling in. They put their stop losses and liquidation areas. They're shorting. People are shorting the shit out of the market right now. Honestly, the way it's looking is it could be a recipe for disaster. And that's why I'm in out. All right. When I say that, it's like, hey, I get in, I get out, and then I take that initial reaction and I'm cool. I take my base hit. These people are in trouble. All right. Now, I'm not saying the price has to go there. I'm not saying it's going to go there, but these people you're flirting with danger right now. You are flirting with danger if you have your stop loss or liquidation level anywhere around 80,000. Period. Point blank. If you have a short and you have a stop loss or a liquidation level anywhere around 80,000, you are part of the liquidity right now. How do I know that? Right here. See that? See how hot it got? Because that's your swing high there currently. And look how people pile it in. There was already some liquidity there, right? You get this rejection, like not a lot of liquidity up there. You get this first rejection right here. This is kind of what I'm talking about. This actually takes home the point a little bit. So you had liquidity here. It got taken. You can see not a lot going on. Shorts started to pile in. As it heats up more and more as you go to the right. You got to understand how to read this chart too. I love watching people try to read this chart, especially when they're doing it live and they don't know how to read the chart. Understanding that there wasn't a ton of liquidity here. You get the rejection, liquidity starts piling in, and then you get this second rejection here. So it took off this liquidity that heated up because of this right here, took it off the table. And then what happened? Shorts piled in again. And so here we are again, stop losses and liquidation levels rated around 80K. So yeah, if you're part of that right now, as it's trending up, you got to be very, very careful, especially if you want to stay in a trade. If you want to stay in a trade, you got to be very, very careful. I mean, it's hard because it's not likely that you got the exact top. You probably got somewhere here, 2 candles or so down, right? You're probably damn near break even now. Some people, right? So I would just say be very, very careful with that. That's one of the reasons. Like I always look at liquidity first. That's usually my starting point. Now this map here is not like your end all be all. Obviously it's an aggregate, but it's a nice starting point. It's a really nice starting point. And then you can go over to some kind of order flow and check to see, do you have passive orders? Well, boom. Where's that at? Look how it lines up. Right below 80,000, 79.5. 79.5, and then you have passive orders sitting at 80,000. So what happens in this case? If we know the liquidity's down 79.5-ish, that's here. So they get wiped out, and then the passive orders get filled, and then what's going to happen? Because they're wiped out, right? That's stop losses. That's liquidation levels. They're done. They're done. They're out of the game. And then the passive orders get filled. So then what's the reaction? The price goes down. So exactly what these people thought at 79, 79.5, exactly what they thought was going to happen is what ends up happening. That is the most frustrating part about trading ever. Is that you get into a trade, you make the right bias decision, right? Your bias is correct. You think that there's going to be a rejection and price pulls back. Ultimately, that is what it does, but you got liquidated and you got stopped out because you didn't take the whole picture and into the equation. And so that's why I'm always looking at liquidity. I'm always looking at the passive orders. I'm always looking, at that stuff because the support and resistance is dope. That's cool. Fibonacci retracement levels are cool. But like, if the 0.618 is down here and the 0.786 is up here, which one am I more likely to look at? The 0.786, right? It's just a Fibonacci retracement level. Yeah, they have a penchant to provide support and resistance and bounce. But this is my key, the liquidity. So one of the other things you'll hear me say, if you're new here, it's the first time you're listening to me talk, one of the most profound things that I read when I was studying and trying to really learn was that the guy, he said, my entry is your stop loss. Let that sink in. My entry is your stop loss. So this is the case in point for that. Because the liquidity is right there. Those people get liquidated. And these people right here enter. And who's going to win the game? These people. Most likely. Now, then, because I'm a little more conservative, that's when I let the candles talk to me. That's when I'm saying, hey, remember when I was talking about 74K? I was like, hey, if you get an impulse move through the zone, you're not trading a short. You're not taking a short. Because what's likely to happen? A breakout retest. Now, this is the daily, so obviously the candles are going to look even less aggressive, and still you can see the move through the zone, breakout, retest, continuation. Same deal. When you get up to those levels where you know there's passive orders, liquidity, all that good shit, if you have an impulse move, like you get a big body candle like this, stay away. You're now looking for a breakout retest continuation where what was resistance is then support. That will happen, but likely what you're going to see is an initial rejection, and that'll look a little bit more like this. That some people call, a liquidity grab, swing failure pattern, whatever the case may be. If you see the wick and you see the price pushing back down, more than likely there's a sell-off, selling pressure, whatever you want to call it. Whatever you want to call it is fine by me. But you let the candles talk to you. You're not taking a big-bodied candle through the zone. That's silliness. You look for the rejection, you get the rejection, and then you look at your trigger. I don't care where you go, Market Monkey Terminal, Kayataka, whatever the case may be. If you start seeing CVD going down, especially in this case, because we're talking about it pushing up. Let's say if it pushes up, you see CVD going down, open interest starts going horizontal or down initially, but then you see open interest like this where it goes up, all right, and CVD is going down, bingo bango, all right? That's going to be your A+. Liquidity off the table, passive orders getting filled, CVD going down, open interest going up. That's your A+. And that's the sauce. Like, really, you can never watch me again. Today's episode, I've given you the absolute sauce. You don't need one-on-one time. You don't need a book. You don't need personal training. You don't need to come to my Discord. None of it. Now, I can teach you more. But that's the sauce. And for me, that's what I found to be most consistent. This year, in the past, 6 months, I'm sitting at like a 70% hit rate. That's by far the highest of my life. By far. Now, the part that's not fun about this is you have to be patient. And you're a discretionary trader at that point. Not only do you have to be patient, but you have to be around your computer when this happens, or around your phone when this happens. That is a hard part. What I'm doing right now is I'm trying to develop something now that takes all of this into account, and you don't have to be by your computer, and you don't have to be by your phone. Because it's the world of AI, friends. If you're not trying to, make money from AI, you're not doing it right. Don't wait on me. I gave you the sauce today. Go out and do something with it. Shoot me a message when you do. Hey, I did this based on what you said. I'll take a look at it. I'm all in. Let's see what we got going on in the chat. We got Archbishop in the house. We got Hart. What up, dude? Good to see you, man. Hope all is well with you. JT in the house. What up? I think I got Ash already. All right. My man, Al Jr. Here we go, Al. Here we go. I got to screen it before I read it. Don't smoke? Well, don't mind mine. Let me puff this bee, please. Because it's mother effing TradeFly time. LFG. Dump it. That's his thing, man. He loves dumping it. He loves it. DDT says, I pride myself in being good at reading liquidity and order flow. DDT is one of the best. He's one of the better dudes that I know. He helped Market Monkey Terminal with their testing. Like, DDT is really good at that. I'm a dummy, right? Like, I get ADD overwhelmed when I start looking at footprints and all that stuff. My mind, it doesn't compute that way. And you gotta recognize it. Like, I'm telling you, I've tried it multiple times. When you start getting into footprints and all that craziness, DDT's got like 5 different CVDs up, spot, futures, all of it, aggregate, like different exchanges. His mind works different than mine. I'm a simple man. I'm a simple man. And me keeping it simple, that's just personally what has worked for me, right? Like, I find these key levels, I work around the key levels, then I evaluate what kind of reaction we get to the key levels, and then I will formulate my bias off that. That's why I'm very much a discretionary trader. It's very hard for me to put out signals. Like, I'm like the alert. I was thinking about it today. I was like, I'm like the alert, like on TradingView. Because like, I don't, it's really hard for me to be like, all right, this is what we're gonna do. We're gonna take this short from $80,000. We're gonna take it down to here. This is gonna be your TP1, TP2, stop loss here, here, here. No. It's hard to do that because I'm a discretionary trader. And you know, some people are like, discretionary traders are trash, whatever. Cool. Systematic's the way, mechanical, algorithmic, you name it. Some people are very successful doing that. But the thing is, like, if you get an impulse move through the zone when I put a limit order out there, what the hell does that do to me? I literally just handed them money. Literally just said, here you go, take my money. I put a limited order there. I had a good stop loss. I had it all set up and ready to go. But, you know, some kind of bullish news came out, just pushed it. Why on earth, if I'm a discretionary trader, would I take that trade if there's an impulse move going through the zone? I wouldn't do it. So it's really hard. And I've had multiple bad experiences with that, where I put limit orders out there. You know, I put it out there on the show sometimes where I'm like, hey, it's 2-to-1 there. But I always let you know that this is a starting point. When I'm putting a trade out there as a starting point, that's just saying, can we get a 2-to-1? And where does the wick go? That's what you're going to base your stop loss off, truly. It's just from a technical perspective, we have things that line up, we have confluence, and in that case, there could be an opportunity for a trade. It's not saying put a limit order out there. I'm just not about that, because I've given money away too many times trying to put a limit order out there. It's crazy. Anyways, y'all got me today. 1, you got sauce. 2, you got me to ramble. DDT. Yeah, man. So I get the hyperfixation, man. That's my problem. I ran through my AI credits in 1 day yesterday. I got on this kick about making a freaking indicator. And here it is. And I used all of my credits. And I have a business plan on OpenAI. But I got this little Trend Reaper. It's a Z-score based oscillator with the money flow. I've increased the sensitivity on the money flow, make it a little bit more prominent so it's not so flatlined. And dude, this thing is dope. It's pretty dope. And then what I did is I brought the gradient up from the Z-score up into the candles. So when you get the Z-score, you get this diamond, right? It's essentially just an overbought in this case. But it's pretty dope, man. Like, it's pretty dope. Look, bam, next candle. That next candle, I mean, it's not too bad. I'm still messing with it, but you know, I'm gonna keep playing around. But I kind of like it. And then this one, if you guys are familiar with Chart Prime, and they got the, what is that one that's really, really popular? This is very close, very, very close to that. And it's nothing more than a moving average set at like 118, EMA, HLC4, something like that. So really, it's just a matter of messing with the settings. This closely mirrors a lot of the oscillators, and a lot of them are using Z-score. This is a Z-score based oscillator. I'm giving you the sauce on this too. You can do this as well. It wasn't that hard. AI is freaking fun, dude. But I do love this little moving average. It is a trend monster. Monster. I'm telling you. I'm gonna do some back testing. I'm gonna do the whole open claw thing, and I'm gonna go through what time frame is the best. I'm gonna let it test all that shit. I'm gonna let it test all of it, but I just let it run freaking wild. Find me the confluence, find me the entries and the exits that make the most sense, and then once I get all that stuff figured out, I'll release it to the wild, and we'll all be rich and famous together. It'll be great. We're working on an automated trading system as well. That's forward testing right now, so that will hopefully be done this year. Hopefully. That's the goal. I want to automate it, man. Because I know where to go. I know what to look for. I know what's working for me. And then once I back test that and forward test that, why do I need to stare at a computer anymore? It'll trade like me. Anyways. Crypto Squid in the house. What up, man? Good to see you, bro. I'm like that too. I let my peeps and Frankie's know I've taken a trade with a quick reason. Yeah, dude. Like I do it. So in Alex O's, I do it in my Discord as well, but you know, I'm mostly over at Alex's for the most part. Yeah, dude, I'll just be like, I entered a short. Hope you follow me. You know, like I tag everyone that's in the paid Discord and the premium side, but like, if you're not paying attention, you're probably going to miss it, to be honest. All right. What is the graph under CBD? That is open interest. I'll go back there. Right here. Talking about this one. So very, very simply put, I like to put it in simple terms so that everybody understands. Open interest is realistically, it's positions. Are they being opened or are they being closed? That's the simplest way I could put it. All right. If a lot of positions are being opened, people are starting to join the party, jump into the trades, you're going to see it go up. If they're exiting their positions, you're going to see it go down. Now, it's very nuanced when you start thinking about open interest and where it's at in relation to price action, key levels, all of that stuff. Why do I say that? Because it can mean different things at different times. It's a little bit confusing, but let's talk about it a little bit. So let's say that we have identified a trend, right? And what are we on right now? The 5 minute? Let's go to something a little bit bigger. We've identified a trend. So trend right here, clearly going up, right? Open interest is building, a little bit of FOMO happening right there. Retail's probably jumping in, but what you can see right here, passive orders are already sitting there. So we're already expecting, once we get up to these levels, probably a little bit of absorption, exhaustion, all that good shit. But what open interest is telling you is that cool, people are opening positions. All right, what's more aggressive, or what's the longs are more aggressive right now in this case? But then you see this dip, right? You see open interest going down or horizontal. What that is telling you at that point is that they're most likely, you got to know the trend, number one, going into that move, that they're exiting their positions or closing their positions, or those positions have been closed for them, right? These are market. You got to understand that open interest and CVD is market, where the order book right here, those are passive, right? Those are already on there. So think more like limit orders. But anyways, as it's going down, right, those positions are being closed. Cool, there's less of them. Now, this is why I say there's B plus and there's A plus. B plus, you'll get a continuation, right? Because there was a lot of people that opened positions and got in. In this case, a lot of people that rode this up. Look at how aggressive this was. So to see a continuation in open interest to the downside makes a lot of sense, because they're continually closing. And as price continues to work its way back down, these people don't want to be stopped out, and they want to take profit on their positions that they got in. This is why I say it's nuanced. But then you have other times that we talked about earlier. Let's go to the 5 minute here. When I talked about this one right here, when I say this is A plus, you don't get many of these. This is more rare. This is more rare because this one, you could see open interest continued to go up. So positions were being opened, but in this case, you could actually see CBD going horizontal and starting to actually trend down a little bit. It comes more prominent if I zoom in. There you go. See that? So CBD starting to go down while open interest was continuing to go up. That means that as this price was sitting here horizontally in this range, where people would call this a bull flag and then look for that continuation, they'd be very, very silly to do so. They were positioning themselves in shorts. So this is why I say, yes, news was the catalyst, but people had a heads up on what that news was going to be. It's right here. It showed you that people were positioning themselves for shorts before that news was released and then dumps. So open interest, that's kind of the way you want to look at it. Is the market, are they joining the party or are they leaving the party? That's just kind of the way I think about open interest. Again, very simplistic. And then CVD is what direction is that party headed? All right. Are they looking for shorts or are they looking for longs? And think about this as market. This is more market. And again, Dom, order book here, liquidation levels, think of those as passive. Hopefully that explains it. So you kind of found insider trading. I mean, maybe, to be honest, not much we can really do about it. But the beautiful thing is, you could see this, right? You could see the passive order stacking over top of the price action. That's a nice little hint, but yeah. I mean, it's proof in the pudding right here in terms of what they were doing, how they're positioning themselves. It's just, can you pick up on the trend fast enough? That's kind of the big thing. This is on the 5 minute. So, but yeah, man, a divergence. I won't say a true divergence between price action and CVD, but open interest and CVD definitely diverged there. And that right there that's the setup. Cool. I think that's enough for me. I gave you guys all the sauce that I got. I gave it to you. I'm telling you what, if this is one you guys want to share out and get out to the people, this is probably the one. I went in hard in the paint, gave you guys what I got. That being said, I'm gonna go ahead and get out of here. But if you guys have the opportunity, you want to trade with 2Bit, there's a special going on. You get money on the way in, you get money if you trade, and you save yourself 20% on your trading fees perpetually. That means forever. Forever. It's a good deal. All right. I'm going to get out of here. Hope everyone has a great day. As always, trade safe. Be safe. Don't forget to like and subscribe. I'm out.
Even when you feel low, you can still go. Even when you feel slow, you can still go. Even when there's no hope, you can still go. I never answer to no, man, I still go. Go, 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 yeah, go. Hustle hard, hustle every single day. I'll be making moves till I'm buried in my grave. To the system, I don't wanna be a slave. I've been doing shit my way, or the highway. And in the driveway is a nice range. Cause I grind through the climb, I invite pain. You'll never hear me, bitch, nah, I don't complain. Just gotta flip the switch and you can go and obtain anything you want, anything you need. Your mind's got the key ingredient, it's belief. They'll deceive with the negativity, but I just slide right by that energy. Even when you feel low, you can still go. Even when you feel slow, you can still go. Even when there's no hope, you can still go. I never answer to no, man, I still go. Go, 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 go. You got a mind, but even that could change. You could flip the gray matter like some batter in your brain. That's why I say, fake it till you make it A. And if you play that game, then you just might make a change. Rearrange all the bad to okay. Take the worst thoughts saying, turn them to a game. Take the best thoughts saying, put them on display. On repeat in your brain till you're feeling no more pain. Never slow yourself down, you can do some more. Push past all the pain and you'll find a door. Open it up and finally explore everything that you thought you could never do before. And even when you feel low, you can still go. Even when you feel slow, you can still go. Even when there's no hope, you can still go. I never answer to no, man, I still go.